tools of monetary policy. Okay, so basically there are two tools. One is quantitative tools, another is qualitative tools. Okay, quantitative tools and another is qualitative tools. Okay, now in this, again as I told you in the beginning itself that this topic is very important. Okay, very important. So can you tell me, so my question to you, what are, or you can say, can you list the quantitative and qualitative tool? Okay, so इसमें से कैसे questions आते हैं? So from this there are only three types of question that UPSC used to ask. Three type of questions. So first you must know the list of quantitative and qualitative tools. Okay, so I'll just give you 2 minutes. So please comment in your comment in WhatsApp that what are quantitative and qualitative tools, or list the quantitative and qualitative tools. Please tell me, list the quantitative and qualitative tool. So this is the first type of question they used to ask. List of quantitative and qualitative tools. Okay, so if you see quantitative tools, so number one is, you can say, bank rate. Number two, bank rate. Number two is statutory liquidity ratio. In short, we call it SLR, statutory liquidity ratio. Number three, cash reserve ratio, that is CRR. Clear? Number four, okay, that is repo rate and reverse repo rate. Number five, marginal standing facility, number five. Okay. Number six, open market operation. And number seven, standing deposit facility. Okay, so these are the 7 quantitative tools. These are 7 quantitative tools. Okay, so out of this 7, if you see standing deposit facility, so this we introduced, or you can say used by the RBI in the year 2022, and this is a temporary quantitative tool. This is a temporary quantitative tool. Okay, so ultimately you can say 6 are the permanent and the 7th one is temporary quantitative tool. Okay, so right now we are using this also. Okay, so UPSC can ask you a simple question, which of the following are quantitative tool and which of the following are qualitative tools. Okay, so UPSC will ask you the simple question. Okay, which of the following are quantitative tool and which of the following are qualitative tool. So these are the quantitative tools that you have to remember. So this is the list one. So this is very easy question. Now, when it comes to qualitative tool, so qualitative tool are number one, moral suasion, number two, direct action, number three, margin requirement, number four, credit rationing, or you can say rationing of credit, one and same thing, rationing of credit, one and same thing. So please remember these things with the class itself, because I don't want that you revise again and again your economy. Okay, so if you revise it properly in this 8 days, or you can say from 6th to 13th of March, okay, so I can assure you this thing, that whenever you are going for final revision, so your very less time you have to spend on economy revision. Okay, why? Because if you have understood the concept in this class itself, okay, so your revision time will further reduce for your final revision. Okay, that you will do just before the exam. Okay, so you can spare or use that time for revising your other subjects. Clear? Fifth, consumer credit regulation. Okay, so these are the 5 qualitative tools. Okay, now my question to you, who will tell me that why these tools means written in front of you, why these tools are known as or called as or recognized as qualitative tool. Okay, why these tools are known as qualitative tools. Okay, so this is what you have to tell me, why these tools are known as or called as qualitative tools. Clear? 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 Okay, so this is what you have to tell me, why these tools are called as qualitative tools. Okay, now some students are writing. Okay, very good, because these are used for particular sectors. Okay, yes, so जिनको नहीं समझ आया कि why these are used for particular sectors, so we'll talk about that also. Okay, but the answer is that these tools are used for particular sectors. These tools are used for particular sectors. Now what does this mean? We'll talk about that also. Okay, but for a time being you can remember that these tools are used for particular sector. Very good. Okay, now this is the first type of question that UPSC used to ask. Okay, in this, that they'll ask you in general which of the following are qualitative tool, quantitative tool, or you can say they'll ask you in general which of the following are monetary policy tools. Okay, so if you know the list, you can easily answer it without knowing what these tools are. Okay, then also you can answer it. So this is one of the easiest thing that you can remember. Clear? Clear? Okay. Okay, very good. Now second type of question that UPSC used to ask is that they will ask you the meaning and features of these tools. Okay, so you can say meaning and features of you can say monetary policy tools. Okay, features and meaning of monetary policy tool. And third type of question that they used to ask is, that is application of these tools. Application of these tools. So if you, in monetary policy, if you understood, or you can say properly understand these tools, then your one question is secured. Okay, so at least I can secure your 2 marks, okay, in this. Okay, so at least your 2 marks are secured. Clear? So please don't leave this topic. This is very, very important for your prelims. Okay, so at least we are doing our 8 classes. So I want that when you are doing these 8 classes, so whatever economy questions are coming, so at least you are able to solve 60-70% of the questions. Okay, because if that is possible, then my task is done. Okay, so it depends upon, you can say, if you listen the class as well as if you revise the class. So both the efforts are needed. So I hope you are doing that thing. So how many of you seriously did the revision? If you have did the revision, so please write, yes sir, I did it. Okay, or I revise it. Okay, clear? So now these are the things that you have to remember. Now we'll first start with the meaning and feature of monetary policy tool. Okay, now if you see, first of all I would like to say here that bank rate, comma MSF, comma repo rate and reverse repo rate and reverse repo rate, these 4 tools work together. So basically when we'll see the application part, okay, basically when we'll see the application part, so you will understand, or we'll see that these tools work together. So these tools does not work in isolation. These tools work together. Number 1. Number 2. So first we'll talk about SLR and CRR. SLR stands for statutory liquidity ratio. CRR stands for cash reserve ratio. Okay. Now under this, the first point is that these two together known as statutory reserve requirement. Statutory reserve requirement. So if in exam question comes, what is the reserve requirement or what is statutory reserve requirement, so you have to tell the answer in the option that SLR and CRR together known as statutory reserve requirement. Okay, so these two together known as what? Statutory reserve requirement. Okay, now in order to understand SLR and CRR, so if you see SLR and CRR, so first we'll understand the types of deposits. In order to understand the SLR and CRR, we have to understand the types of deposit first. Now when you go to the bank, there are 2 types of deposit. Okay, one is demand deposit, and another is time deposit. Okay, so whenever you go to the bank, so the bank will ask you which type of deposit you want to maintain, demand deposit or time deposit. Now here remember one thing, now as per me these are deposits, but if you see from the point of view of bank, these are liabilities. Why? Because banks have to give deposit rate over them. Okay, so because whatever money you keep in the bank, so bank used to give you some deposit rate. Okay, so it means for bank it is a liability. Okay, why? Because whatever deposit you have kept, you can withdraw any time with interest. Okay, with interest, or you can say with deposit rate. Okay, so ultimately for bank, these deposits are liability, but for me these are deposits. Okay, so you can say, if you see from the bank point of view, these deposits are called as liabilities. Okay, so if I use the word demand deposit or demand liability, similarly we can use the word time deposit or time liability. So anything, okay, anything we can use. Okay, now if you see demand deposit is further classified into current account, in short we call it CA, and saving account, SA. Okay, so if you see current account and saving account, So current account is basically used by businessman, or you can say those person which have a daily transactions. Okay, okay. So like shopkeeper. Okay, so they have a daily transactions. Whereas saving account is used by people those who are working. Okay, so you can say either in the government sector or private sector. Okay, so those who get some fixed salary, so they does not have daily transactions. Okay, so they have weekly transactions, or you can say weekly transactions or monthly transactions or fortnightly transactions. Okay, but businessmen have a daily transactions. And when we are talking about transactions, so we are talking about big transactions that they used to conduct daily basis. Okay, on daily basis. तो अभी अगर हम भी transaction कर रहे हैं तो कितना कर रहे हैं, 500 रुपया खर्च कर रहे हैं, 1000 रुपया खर्च कर रहे हैं. Okay, so we are not doing more than that. Clear? अपना Paytm और उससे clear. But when it comes to businessmen, so they are transacting like this 10,000, 20,000, 30,000, 1 lakh, 2 lakh, 3 lakh, crores. So in this, that is why they maintain current account, and we people maintain saving account. Okay. Similarly, when it comes to time deposit, so in time deposit there is fixed deposit and there is recurring deposit. So fixed deposit is FD and recurring deposit is RD. Now ultimately, suppose you have 5 lakh rupees with you. Now you want to put in the bank for example for 3 years. So now you can put under fixed deposit. So no doubt, you can say when you compare the deposit rate with respect to saving account, okay, in fixed deposit you will get more deposits or more deposit rate. Okay, so ultimately in current account there is zero deposit rate, or you can say on saving current account you will not get any deposit rate. Okay, saving account there is a deposit rate. Clear? Fixed deposit, in fixed deposit you will get more deposit rate than the saving account. Now similarly recurring deposit is just similar to saving fixed deposit, but the difference is, like if suppose I want to save 5 lakh for 3 years, but right now I don't have 5 lakh, so bank will give you one option that you do one thing, that every month you put some amount, so that in next 1 or 2 years your 5 lakh will be there, and then you hold it in the bank for 1 year. Okay, so it means in this way you will have a savings. Okay, so that is called recurring deposit. Okay, so again for 2 years continuously you are putting some amount, so that in 2 years your amount will become 5 lakh. Okay, and then you will hold it in the bank for 1 year. This is what recurring deposit you used to have. Okay, so this is what, or you can say in FD and RD you will get more deposit rate as compared to the saving account. Clear? So this is what you have to understand. Okay, now once UPSC asks a very simple question, okay, from this, so basically UPSC asks very simple questions provided your concepts are clear. So once they ask a question that term DL and TL means demand liability and time liability remain in the news. Okay, so they ask the question term demand liability and time liability remain in the news. It is related to which sector? So no doubt it is related to bank, or you can say banking sector. So see, one of the easiest question, that is the question of UPSC I am talking about. Okay, now question number 2 they ask, okay, term current account and saving account, so in short we call it CASA. So they ask this thing, the term CASA remain in news, it is related to which sector? So again the answer is banking sector. Clear? So you can say the simplest question they used to ask. Clear?